Rahul, good morning. Hiral on this side. So, when you talk about benefits that could be coming in for a country like India, do you think that the markets are now at an attractive valuation in terms of India? And let's break it up between large caps as well as mid caps. Are you seeing opportunities, and if so, where?
Okay. So if you look at India compared to region, most regional markets would be 10 to 15% premium to their long-term average compared to India, which is at a significant premium to the long-term average, etc. So market is not cheap, but look, the growth story is far more superior to the other emerging markets. ROEs are better, and which is where one continues to like India as a market. Look, we still find value in large caps. The large caps haven't really participated over last 12, 18 months. Last 6 months, they've gone through a period of time correction. So there would be value in large cap banks. They've done well in last 1 month. Something like Reliance would be interesting. And outside that, then there are pockets of select mid caps. Like travel tourism is a theme we've liked. Hospitals is a theme we like. So very selective about the mid caps we want to have exposure to.
I'm just wondering, Rahul, a two-part question. One is other investment opportunities in terms of gold, asset classes that you're looking at. Gold has been the buzzword this entire last couple of days with Goldman Sachs' new targets. And what the mood is like in New York right now with all of the uncertainty happening. But I'll come to the gold question first.
Okay. So I think in New York, what's happened is everybody's trying to make sense of these almost daily or fast-paced announcements which are coming. There are multiple things happening almost simultaneously where you hear the announcements on tariffs, you hear the agenda from the administration where they're very clear that they want to get manufacturing back in the US. They want to cut back on the trade deficits. There is a dodge at work. So, as investors, pretty much like anybody else, one is trying to make sense of all these things. What is very clear is that look, something which happened over last kind of 10 to 15 years, where most US companies outsource a large part of their production to China, is going to reverse. So what is also very clear is the US margins, which we are seeing at a record high, 13-14% will go down to kind of a normalized margin anywhere between 9 to 10%. What it means is the market goes through a 2 3 year US market I'm talking about here goes through a 2 3 years of price and a time correction, and the capital looks out, and that's where money will come out to countries which grab this opportunities, which are able to benefit from this China plus one opportunity, and that's where India stands.